artificial intelligence enables the students to break the theoretical principles what we learn and have a practical data-driven analysis approach. This is the era of fintech technology and the big data. For the real markets, for real investment decisions, portfolio creation is a very humongous task.
In today's world of dashboards, data, and decisions, artificial intelligence is quietly forming a core part of how finance works, from forecasting markets to analyzing risks and interpreting how complex data works. For management education, this poses an important question. How do we prepare students to think critically with AI and not just use it? Welcome to KreAItive Dialogues, where we at Krea explore and try to unpack how we can use artificial intelligence to learn, shape, and to practice across disciplines how we will use AI. I am Sanjana Mattaparthi, a student and research assistant at Krea University, and today I'm delighted to have a conversation with Dr. Jyoti Kumari, an assistant professor of finance, accountancy, and quantitative finance at IFMR GSB. Through her teaching and research, Dr. Kumari has had a lot of work and experience in financial models, data analysis, and real-world applications, areas where AI has become increasingly influential. So, Professor, it's great to have you with us today.
Thank you, Sanjana. Thank you so much to be a part of, promoting the artificial intelligence in the field of finance and quantitative finance. Thank you so much for having me. It is indeed a privilege to be here. Yes, Sanjana.
To start off, do you think that AI in finance has been transforming the way finance is taught, researched, or applied, especially in a management education setting like Krea?
Okay, so see, artificial intelligence is incredibly, you can say that technical innovation which is undeniable at the current times. Okay, and it is so academics is not behind that. And coming towards the Krea or any academic institution, so artificial intelligence is incredibly contributing towards the finance education. I will take the finance education because I am specialized into economics and finance education. So coming towards the artificial intelligence role in terms of first pillar is the teaching, the second pillar is research, and third is the real scenario of looking at the real financial markets mechanism functioning or the real market scenario. So at Krea, basically how we align that with the interdisciplinary approach as well as the data-driven philosophy what we follow here. That is number one. Now first I will take the teaching perspective. So if you talk about teaching perspective, so we basically dismantle the conventional framework of static model analysis, rather than we focus on the dynamic data intensive analysis. Okay, so let me give you one example. Let us suppose that we teach the stock market predictability, data analysis, okay, stock market predictions. So we can allow the students to use the artificial intelligence driven machine learning and to train the machines to analyze the short-term stock market volumes, prices, momentum, and to predict the market. So they get the understanding that they truly can make the connect with the theory and the real market scenario, that how theory functions and how sometimes theory fails. Sometimes AI driven models will also not be able to follow the entire predictions. So that gives us the room for the students to have a very deeper, intuition and the quest of learning and the deeper understanding of the real market scenario and the prediction and the role of prediction. right?
Yeah.
So now second point I would like to highlight on the research perspective. So our master's MBA program at GSB Krea is designed in a such a way that every master course is having the project. So where we provide them to have a short-term data analysis. So our students basically use the multiple numbers of the stock price data, returns, volumes, prices, and they try to analyze and they try to predict, and they derive the practical real analysis of the markets, and they see that how the markets are functioning, which is aligned with the theory which is taught in the classroom. So theoretical frameworks, which artificial intelligence enables the students to break the theoretical principles what we learn and have a practical data driven analysis approach. So that is second perspective. And moving towards, I would say that I would conclude this question with this, that AI is not, AI brings the intuitive intuitions, and it is reshaping the finance and strengthening the finance further for the students to have a real practical approach of the market.
Okay.
All right?
Yes.
So do you agree with that?
Yes, I do. And I think the next question I have, it builds on the answer that you just gave.
All right.
So how do you think that AI has been helping finance and has been helping students who are learning finance in terms of, do you think it has made it more accessible or more engaging for students, especially those who are encountering these these concepts which are particularly complicated for the first time?
Okay, so let me come towards, let me answer. This is a very beautiful question indeed. And see, finance is basically being termed as a very formidable and gigantic task with mathematical equations and intuitions. So now AI has dismantled that barrier, because now we converted that static model into the mathematical driven model into a dynamic understanding of the data driven models. Okay, so as I am expertise in finance and quant finance and comes from the area of asset price dynamics and behavioral finance, so I'll give you one example of the course. Let us suppose that in finance electives and financial markets courses, such as asset price dynamics and behavioral finance, so theoretically we teach the asset pricing model, such as capital asset pricing model, market efficiency, equity valuation, bond valuation, right? So that was the approach of the chalk and talk so far. But now the times are changed. At the contemporary times, we are, through artificial intelligence, we are building the humongous structured data into model building. And they are predicting the models into the market. The equities which are being invested into the market, the equities are being valued, they are valuing the equity, they are looking into that how the pricing functions into the market when theory and the assumptions of the theories are relaxed into the market. So they have a very practical understanding along with the intuitions into the market. So that is how the students, they not only gain the theoretical principles, but they are aligned with the practical real data analysis. Secondly, coming towards contemporary times, the finance data, at finance data we speak about the big data, because this is the era of fintech technology and the big data. So the artificial intelligence enables students to utilize that humongous big data, which cannot be handled by the conventional data handling process. So you need to have the you can say that the big data structure which is humongous. So you need some data storage, that is relational databases, Hadoop clusters. So students, they understand, they use these all technologies to analyze these, and they train the machines. Okay, so I would say that AI is enabling students to rationalize the markets and internalize the real market practice more intuitively, and it is strengthening finance further. Because the more data is practically being analyzed, so we have the very not only theoretical view of the markets, but we get the practical analysis of the markets. So that is what it is, my point of view. So we try to, as an instructor, we try to facilitate the courses with more and more data implementation into the courses. That is the thing.
Okay, thank you, Professor. And to take a lighter turn,
Okay.
if you were to use AI in any sort of project in like a fun, simple way, and
Okay.
AI in finance in particular, so what sort of project would you choose and why?
Okay, so see, if you talk about the AI and fund-driven project, so definitely finance students, they basically start these quantitative subjects to not only understand that how the quantitative techniques are used to analyze. So let us suppose that if we use the fund driven projects, so first of all, as a master's level student, we teach them the stock financial markets, its mechanism, derivatives, fixed income, equities. So I would like to give them this, they can use the stock returns, volatility, volume,
Yeah.
sentiment indicator data, right? And even I would mention here that, you know, currently right now you can use, because of the availability of the big data, you can use the text mining, you can use the climate indicators, as well as the policy uncertainty data, which was way beyond accessible before the, you know, AI implementation and the big data availability. So students can use, analyze, they can relatively build, they can not only propose the hypothesis, but they can estimate, validate, and they can interpret, and they can bring the practical nuances from the theory.
Okay.
Yeah, so I would say that these projects are very intuitive and intellectually giving an honest understanding of the markets. So that is how it functions, and we provide at Krea basically, to enable the artificial intelligence, we provide them the data-driven projects, such as the simulations, which is based upon a very high frequency data analysis. So Monte Carlo simulation, stress testing analysis, uncertainty analysis, because markets is unpredictable.
Yeah.
Even though we go by the artificial intelligence and we propose models, so students learn that where the theory fails, what are the loopholes, that which are the aspects of the theoretical points where theory fails and the practice comes into the picture. So there the data speaks the truth. Data, and through AI you are enabling the data which is in the text form, which is voluminous in nature, which is humongous in nature. So these projects are enabling them to produce much more worth understanding of the market, and they use the modern financial theory as a modern finance professionals, right? And I would say that at the end of the graduation, they become modern finance professionals at Krea, and they would be, you know, with gracefully they will be graduating. So that is the one part.
Yeah, and finally, to extend on the last part of your answer, how do you think students can meaningfully use AI to make smarter, more data-driven financial decisions or analyses during their time as an MBA student?
So yes, so how they would they would formulate a data-driven decision. So first, see, when we talk about finance, it is basically about the risk-return analysis of the market and profit generation. Either it is personal, so personal wealth maximization, or the corporate wealth maximization. So the risk and return are the focal centers of the finance. Okay, so students with AI enabled machine learning techniques, first of all, they understand for either it is for different securities or bonds or the portfolio. So they can identify the risk and returns associated with the different assets and the combinations which they needs to be included into the portfolio. Because the portfolio creation for the real markets, for real investment decisions, portfolio creation is a very humongous task, because it is not only portfolio creation but the performance evaluation as well. How the performance evaluation happens? Time to time, investors and the corporates and managers, brokerage houses, they should have this understanding that whether they are enabling to assess the upside risk, downside risk, as well as the under diversification, whether your portfolio is over diversified or it is under diversified. So from the conventional approach, it is far difficult. Because of the AI, now the new capital market apps, you will be able to, and the students basically, they utilize these machine learning techniques, and they pick up the larger number of stocks, and they see that how particularly the particular stocks are underperforming, overperforming, rebalancing the portfolio. So if you look at the aspects of the portfolio management, right? So it is unlike the very theoretical principles what we learn to just estimate the portfolio performance through Sharpe, Jensen and Trenner ratio. No, that is not the case. That will not give you the real analysis of the market. But the machine learning models are being implemented to the real portfolios into the market, and they check whether the real portfolio is having upside risk, downside risk, and they control the risk. They also do the stress testing into the markets. So what I would suggest, that in a nutshell, I would say that AI is not replacing the conventional theoretical frameworks or understanding, but it is rationally promoting the financial judgments what we take into the market with much more clarity and accurate decision making, and the errors which we can minimal to the larger extent. So I would say that it is intellectually highly intellectual time to implement all AI driven machine learning tools, where students can utilize the big data, structured, unstructured, into their studies. We have a large number of finance electives, and these all electives are data driven. And right now, because of this machine learning, you can utilize the high frequency data as well into the markets. So students are really utilizing the pace, and they are understanding the gap between the theory and the practice, which deeply, creates the quest, curiosity, and the understanding of the practice and the market. So I would, on the completion of the notes, I would say that AI is reshaping finance, and intellectually it is building up finance further to have a more real-time analysis. That's it. Thank you. Thank you, Sanjana.
Thank you, Professor, for sharing your perspectives with us today. And this brings us to the end of this episode. And for all those watching, please stay tuned for more episodes of KreAItive Dialogues, where we will continue to explore and unpack how AI is influencing the way we learn, understand, and lead across disciplines at Krea.